Tourism industry is currently under pressure as growth potential is dampened by a looming recession. Also, post-credit crisis, visitor numbers to Africa have dipped, and so too revenues for tourism industries. We're now joined by Katinka Schumann, who is at the IDC as a divisional executive for the services sector. Katinka, thanks so much for your time. Obviously, people are looking to development finance institutions like the IDC to help support what have been identified as strategic growth sectors in the economy, so industry, tourism, that sort of thing. You've grown your portfolio in tourism to as much as 2.4 billion rands, but are there returns? Is there value considering how volatile the economy and the global markets have been?
I'm not concerned that we're not funding businesses that are sustainable, because that's really the focus of the IDC. We need to know that if you create the job today, it'll be here in 5 years from now. And in tourism, that 5 years is often a 10-year period. It's a long-term industry. So we're comfortable that the investments that we've got will get through this recession as well. Maybe not every single one, but I mean, it's our job to stand with them. And we're quite careful at this stage with adding more rooms to the South African tourism economy. We're very careful should we do that. And I think we'd need to have very solid market research in place to absolutely determine that there is a need in that specific spot.
Adding more rooms. So your strategy has been to focus on accommodation and hospitality in that respect then?
That's right, yes. That's been our main focus. It's where it's capital intensive. And that's where initially, when we started 15, 20 years ago, the banks were really not that keen. Now they're more comfortable with the risk that a tourism business would give you. Also, it's accepted. It's a very large part of our GDP. So it's a real business. So what we're saying in South Africa for the moment, we're looking at the more, let's call it the riskier parts of tourism. So it's your underdeveloped nodes, really new parts in the value chain. And then we think that's for South Africa until there's been a more equalizing balance between supply and demand, because clearly in some sectors there's an oversupply. And then in the rest of the continent, we think there's a huge opportunity.
Okay, we'll chip away at that in small blocks. I want to focus on the riskier aspects, because ahead of the World Cup, there was euphoria. The world was going to descend on South Africa. Hotels were springing up like hot potatoes. Everybody was getting into the construction of hotels, into the accommodation side of the business. Then the World Cup came, circumstances had changed, and we just couldn't fill those rooms. And not only could we not fill them, we couldn't fill them at the prices that would justify the kinds of money that had gone into the investment. So there's a problem here in terms of pricing, and as you're saying, there's an oversupply of hotel rooms. Where did the IDC feature in all of this? How were you bitten? Were you bitten?
Look, I think this is almost a perfect storm. So many things went wrong at the same time. Everyone saw the opportunities at the same time, so they all started building at the same time. And our traditional markets are currently in a recession or close to recessionary environments, so they're just not traveling. And with tourism, you can postpone. You don't need to travel now. And also technology makes it much easier for your business traveler to also stay at home and do it from there. Again, the strong rand has definitely impacted it as well. It's more difficult for us to prove our value for money. And also, I think just our local players must be more savvy. We need to be more creative. We need to be more competitive in how we price our products. And the market is very tight at the moment.
You speak about underdeveloped nodes. Could you qualify what that means? Because many people would say, you know, as you're saying, there's an oversupply at the accommodation level, but there's still so much work that needs to be done along the value chain, in the restauranting and the transport side of things, those niche tourism businesses that need to spring up. Not enough is going into some of those areas.
Yeah, that's our focus, and as IDC we need to take more risk, so we're doing it carefully. I think the contradiction is really that in these underdeveloped areas, there's low footfall. You often have poor logistics, relatively poor infrastructure, and yet the contradiction is that's where people would want to go. So we're trying to find those areas, and for example, we're working very closely now with some of the regional or provincial tourism authorities, because they sit on these assets. They may not have the capital, or they may not have the human capital to be able to develop them, but tourists would want to go there. So we're working closely with them, and let's say it's Mpumalanga, we're saying what are the 2, 3 top destinations, specific areas that you know tourists would want to go to, but you may not have the commercial activities there. We can provide those with you. We can enter into a PPP arrangement or whatever would make sense. So that's what we're looking at.
Are you working solely at that provincial level, or are you engaging with independent entrepreneurs? Because many people are saying that's what we need. We need a Lerato to say, I've got a great idea for tourism adventure business. I just need the IDC to provide me with the capital and I'll run with it.
We've got all those combinations would work for us. Some we get the application from a Lerato would come through the door and we'd look at it and we'll back you if we think it's bankable. Others would be where we get involved in actually assisting to get the project to bankable stage, and that would be the examples that I've quoted now with the tourism authorities. Again, in many of those cases it will often work best if I work with a Lerato. So that's where the PPP comes in. The asset is owned by the provincial authority. We provide the funding, but there's a private sector drive or entrepreneur.
What's your time frame to exit a deal, for instance? You said tourism, you've got to think long term, but what's long term in the IDC's view?
Look, if it's a hotel, it could be between 10 and 12 years that our funding's in place. Sometimes it's shorter, but we're prepared to stay that long. If it's, I'd say anything between 5 and 12 years. That's a good range. Also, I think it's important to note that we wouldn't, in many cases, as IDC, we wouldn't put equity in. It's mainly loan financing. But where we develop a project, and specifically some of these niche things, the adventure tourism, the sports tourism, where you really need to have that catalyst, then we'll have a combination of equity and debt in place.
Your Pan-African strategy, what sort of areas are you talking about? Because you said here you're prepared to go fairly high risk.
Yes. We are at the moment looking at where those business centra are that are growing faster than others. And many of us that have traveled in the rest of the continent would know there's a buzzing economy, but the accommodation facilities are relatively poor and you pay top dollar. So that's a perfect opportunity. So we're looking at where those main cities are. In all cases, we would want to see South African benefit. It's only on that basis that we would proceed with funding. So that could be either South African content, so that South African suppliers to the project. It could be South African operators. And I mean, just today's paper, there was a lot written about Protea's expansion. So Protea as a management company could be the operator in that business.
We've run out of time, but just give me an indication of which sort of countries are you looking at? Are you doing the conventional thing, everybody's going to Nigeria, or are you going a little bit off the beaten track?
Nigeria is always there. That's where people are, so that's a great opportunity and sometimes even a safer one. But for example, we're looking at Ethiopia at the moment. We're also looking at South Sudan, which is really, I mean, it's brand new. It's the newest independent state on the continent. There's very little there. So that would be risky, but there's a real need for it. And then, of course, closer home would be Mozambique, Zambia as well, Ghana, also thriving economy, lots of opportunities there.